Farm Service Agency acreage data could imply higher ending stocks and lower prices. Last week, the USDA's National Agricultural Statistics Service, or NASS, released crop acreage estimates in its World Agricultural Supply and Demand Estimates Report, or WASDE, while the USDA's Farm Service Agency, or FSA for short, reported crop acreage enrolled in farm programs. WASDE reports typically utilize the most recent acreage estimates produced by NASS, which are published 4 times per year, starting with the Prospective Plantings Report in March, the Acreage Report in June, the Crop Production Report in October, and an annual summary in January. As the August WASDE report reflects acreage estimates from the June Acreage Report, FSA data on planted acres enrolled in farm programs, which are initially reported in August and updated on a monthly basis through January, may provide timely insights. A prior FarmDoc study by Irwin and Hubbs in 2020 used a two-step approach to show that as early as August, FSA numbers offer a fairly accurate projection of the final acreage estimates reported in the NASS annual summary in January. Here, the relationships within that two-step approach are updated based on just the most recent 2 years. Given that the just-released FSA numbers are reported as of August 9th, and corresponding releases were as of August 2nd in 2021 and August 22nd in 2022, these last 2 years should, on average, closely approximate relationships for the current data, as prior years generally reflect acreage enrollments as of August 1st, which of course tend to increase throughout the season. First, with respect to the FSA data, corn and soybean acreage enrolled in farm programs by August respectively averaged 99.3% and 99.4% of that in January, which reflects modest increases in enrollment over the season. Second, January FSA acreage numbers for corn and soybeans respectively averaged 98% and 99% of NASS estimates in the January annual summary. These average statistics can be applied to August FSA acreage data to produce planted acreage estimates that can be substituted for those in the supply and demand balance sheets of WASDE reports, thereby offering further insight for price outlook. Thus, for the 2023-24 crop year for corn, an alternative final planted acreage estimate can be produced by first dividing the preliminary FSA number of 93,030,602 acres by 99.3%, and then second divide that number by 98%, resulting in 95,583,606 acres. Equivalently, for soybeans, first divide 82,615,421 acres by 99.4%, and then again by 99%, resulting in 83,996,130 acres. Replacing the WASDE acreage estimates with those obtained here and retaining other assumptions from the WASDE supply and demand balance sheet facilitates an alternative outlook and corresponding price projections. The analysis of FSA data suggests that planted acreage could be 1.6% higher for corn and 0.6% higher for soybeans than indicated by the WASDE report. Assuming the same percentage of planted acres harvested, the larger FSA-based planted acreage estimates translate into more harvested acres. Adopting the same yields, beginning stocks, and imports implies greater supply that, combined with identical assumptions about disappearance, lead to higher ending stocks relative to total use, which should suggest lower prices. But how much lower? Given that supply and demand jointly determine price in economic theory, the stocks-to-use ratio, which reflects the supply carried over after meeting demand for that crop year, should be inversely related to price and is commonly considered, among other things, in price forecasts for storable agricultural commodities. Statistical models approximate those relationships depicted graphically here and project annual average prices of $4.61 a bushel for corn and $12.19 a bushel for soybeans. As a caveat, in the last 2 years, FSA reported acreage enrollments have grown less from August to January than in the past, and January FSA and NASS data have also been more similar, which may reflect greater enrollment of planted acres in farm programs. If those trends continue, then the approach used here could overestimate acreages and underestimate prices somewhat. But if this year turns out to be more like earlier years, then even higher acreages and lower prices may be realized. These points, coupled with the yield implications of much-needed rains falling around the release of the last WASDE report and since, suggest it's prudent to think about downside risk management. For the University of Illinois and Western Illinois University, I'm Jason Franken.